What's going on, guys, and welcome back to another video. So with the potential of volatility in the markets a lot more over the next 6 to 12 months, it might be a good idea as a long-term investor to look into some ETFs. So that's exactly what we're going to do in today's video. So how we'll structure this video is, firstly we'll have a look at my 3 current ETF holdings. We'll see how they're performing, their top holdings within each of those ETFs, and also we'll have discussed my plans going forward for each of those 3. We'll then discuss some of the tax laws in relation to ETFs in comparison to stocks. Now we looked at this very briefly, and if you do want a full in-depth video on this, we can do so as well. Comment below. And then finally, we're going to look at some different sector ETFs that I want to get into over the next few months. And with all that being said, let's dive right into today's video. As I'm sure you're already aware, ETFs stand for Exchange Traded Funds. And kind of in a very brief overview, it's literally accumulation of different holdings into one basket. So it kind of helps, the reasons for them really is because it helps for diversification, and it also ensures you kind of have a blanket approach on any different sector or market. So this style investment vehicle is very handy, firstly if you're a long-term investor. Second of all, if you want a kind of a low risk approach. Now ETFs typically go up about 7 to 12% annually. So if you are a long-term investor and don't really want a lot of risk, then ETFs certainly could be a great opportunity for you as well. And thirdly, if you only have a small amount of capital, ETFs can be a great way of getting into the overall market as well. For example, as you can imagine, the S&P 500 currently has about 503 holdings. So if you were to buy one full share of each of those, it'd be a hell of a lot more than what it costs for one of those ETFs. So the ETFs kind of get fractional shares of all of these 503 holdings and combine them into one affordable stock. So on this portfolio, we have 31 holdings overall, 28 stocks and 3 ETFs. So the first of these ETFs here is the Vanguard SP 500. We currently have 10.3 shares, are up 20% and have €663 invested. In terms of affordability of these ETFs, we can see that I mentioned already that it's a hell of a lot cheaper to buy one of these ETFs than, let's say, all 503 full holdings. So at the moment, it's trading at about $54.58. And my average cost is $49.80. In my own overall portfolio, I aim to have about 10% in ETFs. Again, as my kind of capital grows, I do kind of expect this figure to be growing in terms of about 12 to 15% overall. Again, this is just to help my overall protection in terms of my capital. So as I said, if you're kind of new to ETFs, the Vanguard FTSE, or the Vanguard S&P 500 should I say, tracks the top 500 companies within the US. So if you are looking for an overall blanket approach or diversification across a particular market, then this could be a great ETF for you. Also then have the Vanguard FTSE 100 GBP, which is on the London Stock Exchange, ticker symbol VUKG. At time of recording, we have just 3.3 shares, are up 16.2% and have €116 invested. We can see on screen is currently trading for about £30 and 11 pence, and our average overall price was £27.40. Again, if you're kind of new to investing or ETFs, the FTSE 100 checks the top 100 companies in the UK. So now you can see we have the top 500 in the US and also the top 100 in the UK. So we really are fully diversified across some of the major markets. One of the main investment kind of styles I use, which is very straightforward and very effective in the long term, is the dollar cost average. Now, as you can imagine with ETFs, if you hold them long term, it's going to be very unlikely that they're going to jump back into the negative. So as you can see, like for the S&P 500, we're up over 20%. Now that's not going to go into the red again unless there is a market crash, and a fairly severe crash at that to drop 20% for the overall market. So for that reason, that these kind of ETFs do go against my overall premise of investing, whereas I will be buying into these ETFs continually over every kind of month or so, even if they are in the green, unlike my other holdings where I only invest further if they go into the red. The third ETF I hold is currently in the red, and that is the iShares Global Clean Energy ETF. At time recording, we have 24.4 shares, are down 7%, which is a lot for an ETF, but we'll go into that later on. And we currently have €281 invested. Our average price is currently £11.33, again because it's on the London Stock Exchange, and the current price is about £9.85. So probably the two main reasons why this ETF is currently in the red. Now, when I started investing into this ETF at the start, it was up about 12 to 13%. But again, two factors really. Firstly, the hype and speculation. So clean energy was all the go a few weeks ago, especially when Joe Biden became the president of the US and kind of vowed to have clean energy sectors thriving within the US. But as you can imagine, once the hype kind of dies down, even like the price always kind of has to drop after hype. So that's probably the first reason. And the second reason is probably a more kind of significant reason in the form of their top holding. Again, there's about 30 holdings within this ETF, and their top holding, Plug Power, they had accounting errors, so that helped drop their overall price significantly. Now, as you can imagine, the top holding in a 30 stock ETF, if it goes down significantly, it will still impact the overall ETF. But in my opinion, this overall ETF long term has great potential, and we'll kind of go into that a bit more later on. My plan for these three ETFs going forward: firstly, the FTSE 100 and the S&P 500. I will slowly drip feed small amounts of capital in here. Again, I don't want to put too much in at once because they are performing fairly well at the moment in my overall position. So I don't want to really affect the dollar cost average too much. But again, as I mentioned earlier, I will be drip feeding in money regardless. But I will be focusing a lot more out of the three ETFs on my global clean energy ETF, because again, obviously it's in the red, down 7% at the moment. So I do really want to drive down this dotted line here, which is my average price. So obviously when the market is down or the ETF is down, the more it is down, the more I buy, the cheaper the overall average cost is going to be, effectively dropping this line. So long term, once the market does recover or this ETF does recover, we'll have a lot bigger profit margin. Very briefly, we can see the top holdings in the iShares ETF at the moment. Again, Plug Power is the top holding. What I like about this ETF, firstly, is the different sectors at play here in terms of industrials, IT, utilities, etc. But what I also like about this clean energy ETF, because clean energy is still kind of in its infant stage, in my opinion, and up and coming, it is great to kind of have your hands within all different subsectors, such as wind, solar, hydro, etc. So that is one of the prime examples of why ETFs can be very effective long term. If you're looking for real overall market diversification, well, the S&P 500 again is a great ETF to do so in terms of US markets. Obviously, it has every different sector and subsector within this 503 stocks. We can see on screen their top holdings are predominantly in the IT sector, which is no surprise as well, such as Apple, Microsoft, Amazon, Facebook, etc. make up the top holdings within this ETF. And then on the FTSE 100, which is the UK market, it's kind of interesting to see the comparison or shift away from different sectors. For example, the S&P 500 was predominantly IT for the top holdings, whereas for the FTSE 100 we can see it's more kind of healthcare and the financial sector, with Unilever, AstraZeneca and HSBC making up the top three holdings within this ETF. Also, when investing in any ETF, you should always know if it's distributing or if it's accumulating. Now, if it's a distributing ETF, that means that once the dividends come out of the ETF itself, you will get paid them directly, whereas if it's accumulating, it will reinvest those dividends. So it really depends on what kind of dividends you want. Do you want them coming to you, or do you want them reinvested straight away within the ETF again? So why I wanted to very briefly discuss distributing versus accumulating ETFs, it kind of makes a big difference in the tax world. So for example, if it's distributing, you are liable to pay 41% tax, that we can see on screen here, straight away on any dividends you get paid. Where if it's accumulating, you actually don't pay the tax because it's getting reinvested back into the ETF. So that can make a big difference in terms of simplifying your tax returns for ETFs. Another big point in terms of ETFs within Ireland is that they are taxed at 41%, which is the higher rate of tax when you sell the ETF. And even after 8 years, if you don't sell the ETF, you are still deemed to have sold, which I think is remarkable, but I'm not the one making the rules. So you still have to pay 41% tax even if you don't sell your ETF after 8 years. Another bizarre rule for ETFs in Ireland. So for example, if you had two stocks, one lost 5,000 and the other gained 10,000, so your overall P&L would have been the 5,000 overall, you wouldn't have to pay tax on the overall 10 because you lost 5 elsewhere. Whereas with ETFs, if that's the same scenario where you lost 5,000 in one and gained 10 in another, you still have to pay the full tax on the 10,000, so you can't offset any losses within ETFs again, which I find bizarre. Where it really starts to get messy is where the ETF is domiciled and where the holdings within the ETF are coming from as well. So as you can imagine, if you hold an all-world ETF, it can get very complex in terms of tax, as different countries and different domiciled funds pay different tax amounts and rates. So it can be extremely complex. But again, if you do want me to go into a more in-depth full video on ETFs in Ireland, and particular the tax part, as that seems to be the problem for most people, comment below and I can put a video together as soon as I can. Finally, kind of what I'm looking into at the moment in terms of 3 different sectors within the ETFs going forward are the kind of electric vehicle sector, the technology sector, and also the cannabis sector are the 3 ETFs I'm currently kind of looking for. So if you have any suggestions or ETFs in these 3 categories that you think I should look into, please comment below as well, and I'll be sure to look into them, and maybe even down the line I might even invest into those ETFs myself. But that's pretty much it for today's video. We went through my ETF holdings, we had a look very briefly at the tax in relation to ETFs, and finally, again very briefly, we had a look through sectors I'm looking into going forward in terms of what ETFs I want to buy. If you found this video anyway helpful or interesting, it'd be much appreciated as always if you're new around here, if you consider subscribing to the channel, and as always, if you could smash that like button, it'd be much appreciated. And most importantly, if you have any questions, comments, queries or suggestions, please don't hesitate to comment below and I'll be sure to get back to you as quick as I can. Thanks very much, enjoy your Wednesday, and I will see you all in tomorrow's video.